Daily market review analysis for those of you who are depending on the recording, and thank you for joining me live for those who have managed to join. We've started looking at the Dow Jones Industrial 30, and for a while we've been saying that we were expecting some correction, and we were puzzled somehow because the market was moving sideways, but then we identified that as a rising wedge which would have completed, counting from here, we would have completed 1, 2, 3, 4 and 5. So that minor wave 3 was done. Then we had a retracement, and a little difficult in here to see whether that retracement was like A going back to B, like an expanded flat, and now we have started coming down in C. That's what it seems like to me when I look at it in a minor time frame. Then you can see that this coming down here was definitely some kind of an A, B and C. Okay, and then we went back up, and it's possible that we may even have what we have here, like minor 1, minor 2, minor 3, minor 4 and minor 5, in which case we finished a 5-wave cycle that we started from this low here, which was back in November, and that we are correcting the entire cycle, and in which case we would expect a much deeper retracement. So at this moment in time, see this leg up obviously looks quite impulsive to the upside, but then we break down a little bit. So let me just explain what I mean. Okay, so what it looks like is from the low here we have a wave 1, wave 2, and then this one here looks a little bit choppy, in a sense we go 1, 2, 3, 4 and 5. I mean, we could get away if I was to put an approximate measurement on to see if it complies. Yeah, we could get away, but it's not an ideal, because really speaking we would have liked to see a divergence on that last wave up. So if this is the 5-wave move up, then I think then the entire cycle we are looking at here is probably over, like 1, 2, this one here is 3, 4 and 5, and therefore we've had a sort of a strange kind of rising wedge pattern, but is not ideal. And of course this is sometimes not so easy to identify. You see, if you leave it like that, then it appears that this is disproportionately very small wave. So it's 1, 2, 3, 4 and 5. You see, what I'm thinking is we've only done this one, wave 1, wave 2, our top here is wave 3, this is wave 4 and this is wave 5. So we've finished this cycle here. So if we finish that cycle, then this is 1, this is 2 and then this is 3. So in that case we could assume that we are retracing this particular cycle here at the moment. So let me take some of these bits off to help clarify. Okay, so I think what we are doing now is we are correcting this leg here. So we are correcting this leg, and if I was to I think I'm having a little bit of a problem with the continuation of the internet for some reason today. Okay, so looking at that, the common retracement we expect for wave 4 is something like 38%. Okay, so we expect 38%. So if we expect 38%, then we'd be looking for a drop somewhere in this area here. Somewhere in this area here. Are you able to hear? Let me just pause. Okay, so I think what we've got is most likely we've only completed this one as a 5 wave. So we've got a wave 1 starting from November here. We go wave 1, wave 2, and I think this is probably a wave 3. If this is complete, then it looks very, very small. It's not sort of thing I'd really like to see, because you had a very big wave 1 and 2 and 3, but then if this one is a part of the same cycle, then it's I think very, very small. Not impossible necessarily, but it looks to me as very small. So I'm, for the time being, going to assume that it is actually just a part of this wave here, only assuming that we had 1, 2, 3, 4 and 5, and that completed this cycle. So for the time being, I'm putting my Fibonacci on that one, and 38% will bring us to something like 13,600. It's an area where previously we approximately identified, and that's where I'm expecting. Also, if you look at it on the left hand side horizontally, then previously we had resistance back in October, 5th of October, around 13,600 or so. So that's basically where I'm expecting this one to come down, and it's really started selling off today. And so what we might find is that it might sell off for a couple of days, and Mondays and Fridays either make high or low of the week. So just following that rule, it looks like we've got the high for the week. So during the week, if we do bounce, we'll probably bounce like that, and then we'll probably come back in a second leg, or we might just have a real sell-off for the whole week. So this is what I'm expecting. Dow Jones to continue declining probably to about 13,600, and if it continued, if it bounced and came back, then we may retrace like 50% of the rise since the 31st of December. So for the whole year, this year, we'll probably retrace 50%, after which we would then expect market to continue higher. Okay, so we'll get some more clues as the prices develop, but for the time being, I'm assuming that we're only going to retrace this move since the low back in December to the high of this year. But nevertheless, for the rest of the week, I suspect we'll probably have a weak equity market. If we look at the oil, then oil too is coming into an area where we identified here, which was approximately 50% or 61.8% before we bottom out, and it has actually declined almost into 50%, not quite, but it's getting there. So this one here is a wave 4, and that might be wave 5, and in which case I think we've probably completed the whole of this, which is what we're trying to retrace. We do have a minor trend line coming up, and 61.8% that might come into play here. So if we're starting from here, then this is wave A, B and C. So this one is wave A, this one is B, and we are currently working on a C. And because this one was A, B, C zigzag, we'd expect A, B and C zigzag in this one as well. Okay, so we've already got a minor A, minor B, and we're working on this minor C. for the oil. So oil will continue to decline until we probably get into minimum 91.50 area, but more likely around about 90 area is where I think we are looking to come into before the bottom is formed. Now this is assuming that we just have a straightforward simple correction, but sometimes, you know, what we expect, because we don't know exactly how things are going to develop, we have certain expectation, and those expectations sometimes play out as we outline, and sometimes they might take a slightly different form. So here, you know, so far I think if this is the leg, we've got A, B and C, that's quite clear. So generally when you get A, B and C, then also in the second leg different proportion, but in the second leg we should also get A, B and C, and that's I think what we are currently under you know, development. And also if you look at, you know, daily chart, yeah, we're still coming down, no problem, no divergence yet, but on the 4-hour chart there is no confirmation, but there is a potential divergence in that area. So if we get a divergence in that area, then it may be that it might line up with the possibility of this bottom forming, and if the divergence fail and we decline a lot more, then I think we have a lot more deeper retracement to come. So we will not know exactly what that is until a little bit later on, you know, into that retracement developing. But for the time being, we're expecting it to drop to possibly around minimum 91.50, more likely 90 area. Okay, and then we will see if we get a divergence that is confirmed on the 4-hour, but probably not on the daily, unless, for example, we get something like this. We get a couple of days of sell-off, a small bounce, and then we have another sell-off, and if we got that, then it might allow possibility of divergence even on the daily. But I think this week is obviously going to be weak, I think, both for the equity and for the oil, and that would suggest that all the dollar index should remain strong for the rest of the week, and probably going into next week. So looking at the dollar index, I was going through the recent price action on here, and so far previously we had several different waves on here. Now with the price action here, what I'm prepared to accept is that whatever these waves were, we'd say that was A, B and C. I think that was the simplest one, and it seemed to match with some of the other currency pairs as well. So we'll say minor A, minor B and minor C to give us capital A, and I'm still of the opinion that we are in a flat correction here. So we've got A, B, C to give us wave A in bracket, A, B, C down to give us wave B in bracket, and now we are doing A, B and C to the upside. So no, sorry, my apology. I think I've got a couple of different charts and therefore I've mixed them up. This one here is a B, so we've got this as an A, this one as a B, and then we are working on this wave C in parentheses. Okay, so what we've got this capital wave A, then go A, B, C to give us wave A in bracket, then go A, B, C down to give us wave B in bracket, and we are now currently working in wave C in bracket. And based on this understanding, if we have A, B, C in wave A and A, B, C down in a wave B, then wave C we should have 5 waves. So we are currently following that particular pattern, and it is possible that this one can be quite strong. It can even be much higher than here, because it's an expanded flat or just a flat. This one can be higher, so we can't rule this one out rising further. I don't think somehow that it would go all the way to there, because that would I can't imagine that, but it, you know, I mean, if I've got a wrong handle on all of this, then of course this can go all the way there. But you see, if I doubt everything I do, then I wouldn't really be able to form any viewpoint. So I'm still currently saying that we are in a downtrend. We've got capital A here. We are trying to complete this ABC to give us capital wave B, and we are still going to follow this particular pattern here. So we are looking for 5 waves to the upside, and currently if you look at it daily, we have gone quite high here. And you see, if the market goes up a little bit more, then what I think also is that this RSI will go quite high compared with this one here, but I think the price will not come there. Price, I don't think, will come all the way there. RSI might get into the high area, and if that happens, then I think what we might have is potentially we might have a lower low on the price, but a higher high. Sorry, let me put it the other way. What we might have is a lower high on the price, but a higher high on the RSI, and that would give us a hidden divergence. So I'm still expecting that to develop, and that will line up with me with this being 5 waves. If I drop down to 4 hour, then on 4 hour you can see that we at the moment really do have a very strong unmistakable divergence, because, you know, compared with this high, which I think was a part of a wave 3, however we count it, so that was wave 3, this is wave 4, then currently we're going into wave 5, and that wave 5 is diverging. So I think we could well be saying that the top should be in fairly soon. So if I look at this entire decline and I put my Fibonacci on, then 61.8% comes in here. Let me just put the labels on there. 61.8% comes in around 82 area. Now, for few times in the past we have banded around 81.50 to 82, you know, but we were not certain, because we were possibly expecting some kind of a contracting triangle, and when we finished with that one, we're expecting a flat, which is, I think, currently is correct understanding. However, we are approaching 61.8%, which is an important area in a general Fibonacci retracement terms. And also when we dropped here, you see at this area is where we bounced on it, and I think we are coming back into that area. So I suspect that we would be expecting some degree of resistance in there. And also on the left hand side, just in this area we had a strong resistance. And at the moment we've just gone slightly above that, but we're approaching basically that area. So if I put a horizontal trend line, this is what I mean, right? That's where we're coming. So I think we're coming into an area where, rather than a specific line, we're coming into an area where I think we should be expecting a top, because on the 4 hour we are getting clear divergence on the RSI. And then in the 4 hour terms, if you look at this entire leg, then we've said this here as a 1, and then we probably got A, B and C, so it's like a running flat. And the running flat normally happens when the movement is very strong in the direction that currently is the main trend. So this is the main trend, and therefore this ABC is correcting, but it's correcting in the direction of the trend, so it's very, very strong. So we would say that this is wave 1, this is wave 2, then this one is a wave 3, okay? And then if you look at the wave 3, so up to here is clear wave 3. Then we've got this very strange kind of a thing, which I think is probably this kind of a pattern, you know, and that happens in a wave 4, because if this was wave 3, then you get A, B, C, D and E. So it's like an expanding triangle. That expanding triangle normally happens in a wave 4. Well, not just expanding, but we know that any triangle, any triangle, whether it's a whether it's a contracting triangle like that, or whether it is an expanding triangle like that, happen in a wave 4 or a wave B. That is different from a rising wedge that we often talk about, like this one, or a falling wedge that we talk about. The falling wedge and rising wedge are different from a triangle. So the triangle happens in a wave 4. So far, if we were to follow that, then I think we have reasonably correct handle of what's happening. So then we should be in a wave 5. Okay. Now if we look at that and say slightly smaller time scale, maybe say 15 minutes, then on a 15 minutes it would look, lead me to believe that this one is a 1, 2, 3, 4, and 5, so relatively big wave 1, wave 2, wave 3, and we are currently in a wave 4. So if I look at my RSI, what does it show? You see, at the moment we have a divergence on 4 hour for a larger divergence between this wave 3 and the current wave 5. And then if you look at this 15 minutes on this very last leg here, see, we've got this wave A, or 1 rather, this could be 2. If this is 3, then currently we're retracing in 4, we might get another thrust up, and we should get a divergence. So maybe what might happen is that we've got a very extended strong wave 1, wave 2, and wave 3. Now nevertheless, the wave 3 is supposed to be the strongest in terms of momentum. So that is clarified here. Wave 3 is almost as strong as the high. If you look at the RSI on these 15 minutes, see that RSI is the highest RSI compared with that one. So I think that could still be wave 3. Nevertheless, in actual dimension, it is smaller than the previous wave 1. So then what we got here is a wave 4. All of this is probably part of wave 4. So what we have in a wave 4 is this wave A, ABC wave B. I think we're going to come down for wave C, and then we will go back up a final leg to complete that. So here we are getting like a flat correction here. Okay. May find a little bit lighter color. Okay, we'll go with that. So what we're happening is we've got wave A, wave B, we're going to come down to wave C, and then we will have another leg higher. Now if our understanding is correct, then wave 3 cannot be the smallest, so the next leg higher can't be longer than this. That's the other, because wave 1 is longer. Because wave 1 is longer, once we finish this A, B and C, depending on where we finish, then in fact this wave C or wave 5 cannot be longer than wave 3, so it has to be equal to wave 3, and you can see where that is going to bring us into. And let me explain. Okay, so what is going to bring us into is, first of all, we've got 61.8% retracement. That brings us into almost like 82. And then see, if I take this decline and I project it higher, then in other words, if it retraces 100%, it comes to this. If it retraces 161%, then it comes to an area around about 82, and just fraction of 82, fraction higher from 82. So I think 82 is probably an area where we are going to top out. And also 82. Okay, so let me just move this one up here. Okay, so in 82 area, 4 hour, we have a divergence for this last bit here. And then in 82, if we look at where this projection comes, I don't know exactly where the low is going to be, but assume the low is the same as what we just had here. Assume the low is where this low is, and if we put a projection of this wave 3, so in other words, this wave 5 cannot be longer than this wave 3. So if that's correct, then I'm expecting around 82 to maybe 82.1 approximately is an area where we should be expecting a major top, or certainly a top from where we would expect dollar index to at least make, if not actually commence a new downtrend, I would expect it to at least top out and probably come down and retrace a substantial part of that. But I think we might actually get a new trend down. That's on the understanding that we are on a expanded flat. Okay, so I think it's important to try and get a handle of this dollar index, regardless of the fact that it is not an easy thing to do. Sometimes when the waves are as they are, without a clear impulsive and clear you know, in a direction of the trend, it does make it difficult, and especially an expanding, you know, flat like this. One, because it takes so long, and second, it's such an overlapping wave that you really don't know where you are. If you were looking at the normal standard technical analysis, you'll be looking at, you know, support and resistance. So in here, I mean, you'll be looking at support and resistance, you know, all over the place, other than the fact that it's very extreme is an area that you can identify. Okay, so first of all, from the point of view that we got a fib confluence coming into 81 area, 61.8% retracement of that, and 161% extension of this last swing down comes into that area. And then if we look at the 5-wave counting, then, you know, our projection is coming into there with a 4-hour clear divergence, and you can see that we are still in the current uptrend channel. We're probably reaching the upper end of the channel here. So with all those things being equal, I am expecting maybe over the night and maybe tomorrow we might see this pullback complete, and maybe then day after we might see this another thrust up. So if that plays out, then on the equity index we are not expecting a substantial deep correction. We're only expecting a short correction. That short correction meaning what I was saying about so far only this leg being corrected. Okay, so we're expecting a drop and then a retracement and maybe another drop, but that drop maybe not even come this far. It might only come to 38% retracement, which is 30,600 around here. Okay, so maybe something like that. Otherwise, what we may also have, because you see this is not an ideal 5-wave, so what we may also have is this down as a wave A, and then this one is like a complex ABC as a wave B, so it's an expanded flat, and then this one coming down as a wave C. And in this wave C, you can see also that we have this drop as a wave 1, this is 2, this one is a wave 3, so we might only get, relatively speaking, a small retracement, wave 4, and then finally a drop for wave 5, and that might actually be all there is for this correction. So we might not even get this second leg coming down. This might actually then turn up to be the bottom, and we would start going back up. Why? Because we've got this as a wave 1, this as wave 2, and then this one as an expanded flat is an A, B and C as a wave 4, and then we'll be going for wave 5, and after that we would probably expect a much more deeper retracement. So those are two possibilities for the equity index, and if that plays out with this dollar index, that what we are suggesting here, because it only now has a relatively limited upside. But if it does something different, then we'll obviously have to review this maybe when we re-examine this tomorrow. Okay, so with that said, let's have a look at the pound pair we were going to look at. And at the moment, with all those things that have been going on, it is quite difficult to actually get a handle on most of these things. So what have we got here? Well, first of all, just to recap, is that on the euro pound we've had clearly wave 1, or an A, but I think it's more likely wave 1. And then we had this running flat as a wave 2, and this one was a wave 3. Okay, in this wave 3, you see we've had the highest momentum here, so that's a wave 3 on a daily chart, and then we've got this divergence on there, quite a very pronounced divergence, actually, to say the least. So if we now look at it here, then I think this is wave 3, this ABC is a wave 4, this ABC is a wave 4, and then over here is the most unusual kind of finishing pattern, and what I mean by that is we've got this kind of like a megaphone pattern, you can see. So we've got one, and when you get a pattern like this one, you don't fully get 5 waves, you get ABC. So in each of these swing, you'll more or less see an ABC swing almost. So here we got a ABC as a wave 1, A, B and C back here as a wave 2, then go A, B and C as a wave 3, then we've probably got this one down as an A, B and C as a wave 4, and then A, B and C as wave 5. So I think from that perspective, what I think we have is this one down as a wave 4 and this one up here as a wave 5, and therefore in terms of this cycle, this 5-wave cycle is wave 1, wave 2, wave 3, wave 4 and wave 5. That 5-wave cycle is complete. So if that's complete, then on a euro pound, what I'm expecting now is in fact a retracement of the entire, okay, so in the retracement of the entire rise from the bottom to there. And what should we get? Well, I'm expecting we should get at least 38%. So if we get 38%, then really speaking, euro pound would be coming down to and you know what that means? That means the euro is in trouble. Okay, so euro pound should be coming down to somewhere around 84. And what do we expect in that decline? We should expect a wave A, wave B, and we should expect a wave C down to come to take us into 84 area. Okay, at the moment we might not be able to put any specific trend lines on, except if I was to extend this one, you can see that one was the original trend line. We had a little bit of price action here which sort of dropped below, but maybe we can do this. Okay, so we've got a double, let me put the Fibonacci on again. Okay, so what we've got is possibly this rising trend line from here, and on the daily I've connected this low, and then basically the series of next couple of higher lows which mark the most of the price action up to here, and then some of these price action fell below, so I put copy paste the same parallel line and I just put it onto there. So I'm expecting in this zone here, whether it is this top line or eventually the bottom line, but in that zone, an approximately 38% retracement to come into that area. Okay, this head and shoulder pattern is no longer now that relevant because the objective has been reached, and I think the euro is only in trouble in a shorter term. I think it's not actually finished. I don't think it's going to go back to July low. I think in this one we are still in an uptrend in a normal technical analysis term. While this line is being respected, euro pound is still in an uptrend. We've got a 5-wave up, and those 5 waves are confirmed by the divergence on a daily chart, which is very good because normally some divergence we haven't been seeing on a daily chart, but here there is one in a clear daily chart, and we are going to be expecting one or A, B and C. So if we look at it on an hourly chart, then you can see this apparently is not really given much. It's a major drop. And in fact, um, in the night time, in market, gapped up when it opened. It gapped up, it went to the level, and it came back. And based on this understanding here, and of course in the night time I was sleeping, so I wouldn't really know. But in the morning when I looked, and we were having market, having made this reversal bar, that's when I realized that this is potentially the ending pattern. So if you wanted to trade this to the short side, I think it is safe to trade to the short side. What you would do now, you wouldn't do anything at the moment, but you want a decent retracement of this decline. So this is the 4-hour chart. You see we've had hardly any retracement on the if you want to see any retracement, you'd have to drop down to like 15 minutes chart, and then it's not really a retracement, it's like a small pause. So here you got 1 2 3 4 and 5, so that makes 1 2. If this is 3, then this one is possibly developing into 4. We should see a small decline. This is on a 15-minute chart, so you should see whenever this is finished, we should see a small decline. Okay, so what I'm talking about is go 1 2, this is all 3, get some small retracement, and then small leg down. So if I then go back onto the hourly chart, then basically what we're expecting is small leg to the upside. It doesn't matter how much, really, we're not interested in that. We're expecting, but whenever that finishes, and I don't think we'll get a very deep retracement, so we'll get a small retracement and then we'll get another leg down. So once we get that leg down, wherever that leg happened to be, either there or a little bit lower down, doesn't matter where exactly, but because of this here, if we keep it in proportion, then I think we might even get this one in the night time. I think we'll probably be waiting for what happens in the Italy election, but basically we should be able to have this one dropping to somewhere along this sort of level here, around 85, 0.85 80 or 0.86. So somewhere in this area here, right? Once you get this next drop down, then on a 15 minutes you should be able to see divergence. You see at the moment we have the lowest low of RSI is trying to retrace. If you get another leg down, RSI will diverge from it. Okay, and it probably might even happen by the time we finish this webinar or soon after. But once we get that, then we don't panic. We don't panic. What we do is we put Fibonacci retracement on there like so. Okay, wherever that low is, and what we want is we want it to retrace like 38% retracement. So if we retrace 38% retracement, then we get 38% retracement, so we should be coming to retracing back to something like 8660 or a little bit higher. Okay, so if this one then comes back, and it will come back in ABC form like that. Okay, so it will come back into ABC form into about 38.20 and around there, so it will be 0.8660 or 0.8675 or somewhere in that, or we might even get deeper retracement, so don't discount that. We might even get 50% retracement. Okay, but what we do want to see is whenever that retracement is, we want this ABC kind of a pattern. And if you then look at it in 15 minutes, when we get near the 38% or 50% retracement, we should also see another divergence. So in other words, this RSI eventually will rise up, come down, and then the price will make higher high, but the RSI will fail to confirm, and then we'll be effectively talking about continuation, right? So if you go back now, overall what we're expecting is this market to form a bottom, intermediate bottom, ABC retracement back up, and we're looking for continuation of the trend. So in that continuation of the trend, this is what we're expecting. So this wave A will be finished around here. We'll be expecting this retracement back to that sort of area, and then the next leg down is the one that we'll be looking to short, and it will be an intermediate swing trade. So probably with about depending on exactly where we get the retracement to. Okay, but say for example we get a retracement to 86.60 or 86.70, then from there coming back to the area we're expecting, we'll be looking for maybe a couple of hundred pips at least, probably a little bit more, maybe 300 pips, 250 to 300 pips. So I think it may be sensible to consider that possibility. And also if you look at it on a 4 hour, then you might even get on this retracement up here, you know, for example if you retrace it back to there, then you might even get a rudimentary looking head and shoulder pattern, okay, with a view that this here is your left shoulder, you got a head, and then this one is going to retrace to form a right shoulder. So you'll be looking to short that, and the target would be, a minimum target would be at least 38% retracement of this entire rise, which comes into the area of about 0.84. Okay, so that's why I think it's a good bit of decent profit to form, and you can enter with a relatively tight stop. So because once you have this retracement, you'll be able to work out where the top is, and you enter short, so your stop will be just above the top, and you'll have like a 40-50 pip stop and about a couple of hundred pip to the downside. So that's one potential trade to the short we can consider. And I think euro, even if the euro don't collapse, I think what we were expecting, remember about a pound gaining against the euro, I think that is likely to happen now, and that's one reason why the euro will be weakening. But also I think the euro is weakening in general terms for maybe few more days, maybe a couple of weeks. It might even turn up to be another couple of weeks with bounces along the way, because here for example we might find out of the election results, we might find a sell-off, and then there'll be some kind of relief rally, and that's the one we will be looking to short to the downside. Okay, so that's euro pound. Pound Swissy, I think is no point analyzing that one, because it will be the reverse of the euro pound in very general term, so I won't spend too much time on that one. Pound CAD today I think seemed to have put the bottom in this daily chart. Okay, and if you look at it, see we have a clear divergence on the daily, and whilst one can't say it's confirmed because we need a break of the pivot actually to confirm, but I am reasonably confident that the pound in other words, not necessarily CAD but pound, has put a bottom in. And if the pound has put a bottom in, that's why you see pound is now relatively strong against the euro, and also it is relatively strong against the Canadian dollar, where previously it was weak. And over here, if you can just imagine with your mind's eye, see what we got. You've got this, and you've got this. It's not brilliant, it's not ideal, because this pair is a very choppy a pair, but nevertheless you can just about make it. What is it? It's an ending pattern. So that gives me another confidence. If this is an ending pattern, what we probably got from the drop here is we've got A, B and C, and this is an ending pattern. So within the ending pattern we got A, B, C, D, E. So I think pound CAD, the bottom is in. So what do we do? Well, if we look at it in a 4-hour chart, okay, so in a 4-hour chart, what I'm expecting now is, so far we have risen in what looks like to be an A, B, or 1, 2, 3. Okay, so if you ignore all of this on here, then you can see on this RSI on the 4-hour chart, we have just about tested the downtrend line. Just about tested the downtrend line on the RSI. That corresponds with the trend line on the price. Okay, so if this is correct, then what I'm expecting now, going to the hourly chart, what I'm expecting now is this to be a new trend to the upside, in a very early stage of a new trend to the upside. So on this hourly chart, if I put this trend line on, then that's my first projection on what's going to happen. So if I now copy paste that and I put it on here on the top, and I also put it on this top here, okay? So this drop is the last drop, it's the last leg, okay? So from then on, what we're expecting, so in other words, this is the bottom here. So what we're now expecting is this one to be a minor wave 1, okay, and this one here to be minor wave 2, and in which case this one is a minor wave 3, and then we would get a retracement, which I think currently is in a process, minor wave 4, and then eventually we'll get a minor wave 5, and that minor wave 5 will probably confirm the break of this downtrend line, okay? If we, for example, imagine that the wave 5 will be same as the wave 1 approximately, and then depend on where that 5 wave is going to be. So you see over here we have a possible resistance, and I think we might actually run into that, and we'll complete the 5 wave to the upside. So once we complete the 5 wave to the upside, then this is an hourly chart, then what we expect is we expect a, you know, usual retracement, A, B and C, in that kind of way. And also then we'll put a Fibonacci on, and we might find that this rising trend line here might actually be the support, in which case, you know, we are looking for a possibility and horizontally, if you look at it, you see on here, this one a little bit out, but on here we've got, you know, potential resistance. Now we've broken up, we'll go back up, come back and retest it, and we'll probably come into the same kind of an area. So around about 155.50 is where I'd be looking to get long. In other words, we'll be looking to get long almost where the price is now, or a little bit lower. But I wouldn't enter now because, one, I wanted to let it play this out, because so far I think I'm confident that we have this ending pattern as a potential bottom. We have divergence on the daily, so I'm fairly confident we are there. However, what I don't want to do is to enter in prematurely, because just to give you an idea, within a 4 hour this pair can go 150, 160 pips, you know. So you don't want to be caught, because initially you might even have to allow quite a safety margin and enter with a very small position, and I mean very small position. Even if you go with a very small position, something like a half a mini, which is like a, you know, 50 cents for every pip, so every 2 pip will give you $1. But if this one you get this right, and say you get a good run for about a week, you know, or even 2-3 days, this pair has a potential to do in a day 150, 160 pip. So you get 300-400 pip in order, so that'd be like a couple of $100, you know. So because of that, you know, you should really enter with a small position initially, because what we want to do is to try and get into it fairly early, but not too early, and we want to get into it without being stopped out, because once you get stopped out, then you'll start thinking to yourself, now, you know, do I enter, do I not? And you might even find that if your stop is too tight, it'll probably take you out. So initially, when we find a bottom here, we would have to put a stop below this last significant low. So even if we look at 150 pip, so 150 pip is a potential stop loss, and I wouldn't really wait for that stop loss to be hit, because if it breaks my trend line, then it means it's coming deeper, so I'll be looking to get out. Okay, this minor trend line I put in there, that's my initial track line. I do not expect that track line to break. If it breaks that track line, that means it's coming deeper. It might even come all the way back to here before it gets a bottom. So in that case, I'll re-enter at a lower level. But this is a plenty of time. We're going to get maybe over the next couple of days before we get this trade actually line up. Okay, At the moment we might get chopped about if you enter now, so I wouldn't enter now. I wanted to retrace to create with this wave 4, let it finish to finish this wave 5. By then it will have broken this downtrend line, so then that's one confirmation, and we will have a clear 5-wave move. So once you get a clear 5-wave move, then Elliott wave says that we get ABC zigzag, or we get like a flat correction. So we get basically we get some sort of a correcting pattern, either a zigzag or a flat correction, whichever it is, we don't mind. We want that flat correction to complete, and then we look to enter at a lower end of that correction, and initially enter that with a stop being some good distance away, with the view that if it breaks the trend line, then we're looking to get out, and we may even keep a stop tighter in that particular case. But hopefully we should find, and then you see this trend line, what we might find is the price go up and actually come back to retest the broken trend line, and then basically everything will line up, because we've got a broken trend line, we've got a horizontal Fibonacci retracement, we've got ABC correction after a 5-wave up, so all of these things will line up, and we've got the trend line being respected, this rising trend line. So then you can enter this pound CAD to the upside, and I think pound will be strong. Even if it's not strong for next 3-4 months, it will be strong for a while. In terms of the price, I would not be surprised, because remember this is an ending pattern, so we got A, B and C. So here I would not be surprised to retrace half of that, with meaning over here. Okay, so if you get over there and you're looking to go long over here, that's almost like 350 to 400 pips or more. Okay, but I think longer term I'm still sticking with the idea that we've bottomed here. This is wave 1, all of this is part of wave 2, and we are now looking to get long into wave 3, and I'm looking for that one to be fairly strong, powerful leg to the upside, and I think pound will come good. What has happened has just postponed that trade, but I think this one is lining up quite nicely, so I will be looking to stoke a long entry on that. And also you can see we are expecting a correction on there, and pound to gain relative strength against Canada. Well, that is also confirmed by pound trying to gain relative strength against euro pound. Okay, pound New Zealand will be showing the same thing. If you look at in a daily chart, we have made a new low on the price, but look at the weekly chart RSI on pound New Zealand. We got a divergence on weekly. Okay, we also have divergence on a daily. See, look, we've got divergence on daily. So I'm fairly confident that even this one is suggesting to me that, whilst everybody's been maybe panicking, and perhaps some have written it out, and in fact strange thing is I read an article on Forex Live that there was a hedge fund saying to go long on pound, and just like what I was suggesting, they were suggesting long on pound New Zealand, but I was suggesting going long on confirmation, and our confirmation has not happened yet, but now it's lining up. So we will still need confirmation, but unfortunately, if anybody took notice of this particular hedge fund manager who was saying to go long, they might have been under heavy water or been stopped out already. But you see, so on a daily and weekly we have RSI divergence. Okay, the other thing also is, see the last significant low, that's where it was, the brown line is, and we have come down. Currently we've come down, and see what's happened. This to me is like, well, we'll get a confirmation soon. So far we've broken about 5 to 6, about 560 or 570 pip below the previous low. So in general term, everybody will be, what they'll be looking to do, they will be looking to say, okay, it's broken down the horizontal important support, so now it's going to come back up, and they're going to retest, and they're going to short that. I don't think they're going to win on that one, and the reason why they're not going to win on that one is because first we found that pound is gaining relative strength against euro, is also gaining relative strength against Canadian pair, right? But even against this pound New Zealand, just to review what we got, is over a longer term we've been in a downtrend line, and these are the upper end of the downtrend channel. You can see coming down. Okay, so now we are looking at it here, and from this low it appears like this one is a rising wedge, so we call that wave A. So in other words, whatever this was a strong movement to the downside. Okay, so whatever that was, this is definitely a rising wedge as a wave A. Then we got ABC as a wave B, and then we got this wave C, and this wave C is almost A, B and C. So that means this drop was drop, this A, B and C was the retracement of that drop, and then we continued in the same direction. Previously, when we were stalking long, which never actually materialized, we had this trend line here, so we were expecting that low to be the final low, but it wasn't the final low. So what is done is come down, is done ABC retracement, and now it's done a new low, and in a new low is got wave A, wave B and wave C. Okay, so in that wave A, B and C, we've also got some symmetry. So for example, this one here, and I'm taking a little bit of my time, so I hope you won't mind, but you'll begin to see how I'm working on this one. So this here, if you put A, B and C, then potentially that's approximately where the low should be, because this is wave A, this is ABC retracement, and we are coming down to form the second leg. Okay, so just geometrical symmetry that comes into that kind of area. The other thing also to note is we had ABC zigzag as a part of wave A in bracket. Then this triangle is a part of wave B, and we know that this triangle happens in a wave B, and now we've come down in a wave C. Now because we had ABC down in wave A, we should also expect ABC in the second part. So let's see if we can see that. Okay, so here it is. So we had 1, 2, 3, 4 and 5. So that gave us the wave A. Then over here we've got a strange kind of an expanding flat. So we got wave A, wave B and wave C to give us wave B, and then we got this wave C down. Okay, now the next thing to note is that if you measure this here and you put that down from where the wave C started, or even from this high, you see that's another one giving you a target, and just to show you what I mean, you see this one here up to there. Okay, it's the same one applying onto that high. Okay, or this one, if I apply to this one, it comes to the pink line. If I apply to that one, it comes just fractionally higher, but broadly speaking it's saying there as a symmetry. Okay, so that's double projection, bringing it both into the same place. And then we were expecting wave A, wave B and wave C, right? So if you look at this final leg down, then we've got that final leg quite possibly from here. From here we might have this wave 1, wave 2, wave 3, all of this as part of 4, because this is the kind of thing you get often in a 4, and then a final leg down as a wave 5. Okay, so if you take this away, so this here you can see is a triangle of some sort. Okay, and we know this kind of a triangle only happens in a wave 4. So it's a wave 4 because this one down here up to here, or even up to here, is wave 1. Then from there to there is wave 3. Then that is 4 up to here, and then we got 1, 2, 3, 4 and 5 as a wave 5. And then you see as a cross check is that RSI has got a divergence on this 1 hour chart here. For this last one here we got a divergence. Okay, so I'm confident that that too has formed the bottom. And then if you look at it since then, we've had in fact a very strong move to the upside. Look at that, very strong move to the upside. So it's just like the pound New Zealand. We've got wave 1, wave 2, all of this is the part of wave 3, and in that wave 3 we've got 1, 2, 3, 4 and 5 probably. So with 1, 2 and 3 currently retracing. So what we should have is maybe a small retracement, another little bit leg higher, something like that. Okay, and then if you put this trend line on, this minor trend line, probably hold for a complete 5 wave somewhere in that order, or maybe over here somewhere. Something like that. Okay, so what we will have is that 5 wave finish there, and we're good with that one. Then once we know that that one is completed, what we're looking to do is we are looking then for the same as we were looking for on the other one. So depending if we get a high in that area, then we're expecting a retracement. Okay, and again that retracement, commonly speaking, we're looking for the a zigzag down. But if we don't get a zigzag, then we'll be on the lookout for a possible flat correction. If you get a zigzag, that would be the best, because then that, you know, makes it very, very clear. We don't have to worry about, oh, is this an expanding, is it a way, you know. But of course we have to contemplate alternatives like a flat correction. And in a flat correction we'll still get a decent correction, but we won't get a zigzag. What we'll get then is we might get a combination of something like a wave down, back up, and like that. Or we might get some different combination, expanding flat or whatever flat, but we're looking for ABC down or a flat correction. And then assuming that the top comes in that area somewhere, which I'm currently just guessing, I just put a Fibonacci on there, but if it comes there, we'll be looking for entry in this area around about 1.81 approximately, 1.81. If you look at it horizontally, then on a horizontally on an hourly chart, see the price currently has come back into this area where there was a lot of support here. We've come back into that area. We'll be coming down, and then also if you do this one, I think you might have to, if you miss any part of this, you might have to try and okay, so we were talking about this pound New Zealand. So I think the pound New Zealand is also going to play out in exactly the same way as what we just considered on the pound Canada. Which of these two will be more profitable for us to trade? We will try and see. We'll try and get a view between now and the time that our trades trigger. But I'm suspecting that we'll be looking to get long in the area here. And you know, from the previous significant low, many will be looking to short that one, but I think it, as I said, it won't work out for them. We'll be looking to get long, and there is an opportunity for us to make some money on the upside. And you know, naturally, when it comes to the area where previously there was a major low, we will probably find some sort of a resistance there, by when we would have had a larger 5 wave in. So what I mean by that is, because this year's 1 come back as a 2, 3, 4 and 5, maybe I'm assuming we'll probably get a larger 5 wave. We'll get a small retracement, retracement back to this sort of area. So initial trade on the pound New Zealand, once we get in, we'll be looking to exit almost by the time we get to 185. So from there to here, it's about 300-400 pips. So both in the pound New Zealand and pound Canada, we've got initial trade will be relatively small, so we won't be looking to add very much on that one. It will be about 350 or 400 pips initially, and then after that we'll get a reasonable retracement, and it's the one following where we will get long. And I'm almost beginning to imagine on 4-hour chart on the pound Aussie, pound New Zealand, we might actually get inverted head and shoulder. So in other words, this currently head being formed, we've got a left shoulder, we'll go up and form a right shoulder, come back to retrace to form a right shoulder, and then we'll be looking to go up for a reversal. Okay, so that's pound New Zealand. Pound Aussie. Pound Aussie in fact is better than the pound New Zealand, because while the pound New Zealand went on to make a new low, pound Aussie has actually respected the previous significant low we had back then. We've not broken that. Okay, so that in fact is quite good. What that means is that it doesn't have the same structural resistance. It will have some, of course, on the way, but not to the same degree. See, this low here could be potential resistance, but it will be nowhere near the resistance we had on the pound New Zealand, where it broke below the low that corresponded with this particular low. Okay, so from that perspective, I think pound Aussie will probably a better trade to go for, and it's almost lining up now. You know, I mean, you can see on a 15 minutes we're already at wave 1, wave 2, wave 3 currently done, and I wouldn't enter yet. Wave 3 currently done. We'll get a retracement wave 4, which we're looking for a small 5. Once that's finished, then we get another A, another B, another C down, and possibly we try and pick a long entry around 147, if you can get that far, 147 approximately. That will be good. It's got a double bottom, almost seeming like double bottom. Once we get this retracement, you can see it might actually look like, you know, left shoulder, head, and the right shoulder. So I'm getting a little bit excited about this, but we mustn't enter a trade with a very large position, because these currencies can move. I've seen them. I mean, look at this is the 15-minute chart. So from here to the high, it's about 60 pip in 15 minutes. So if you really get it, you know, these pairs can really begin to move. So I'd say that you know, exercise your normal good money management sensible, but I think this one is a close. This might actually be an earlier trade. It might trigger before the New Zealand and Canada. Okay, you can see that we have almost retracing that downtrend line on the shorter term on 1 hour chart, and once we complete this 5-way, we get ABC retracement back, and this is an area approximately where we are looking to go long. And I think we'll probably find that both pound New Zealand, pound Aussie, and pound Canada, all of them will be lining up, broadly speaking, within a day or two of each other. And from that perspective, I think the Aussie will be the weakest. So I am looking potentially to go long on pound Aussie, and is more cleaner. Okay, so the previous trade we were looking for a Euro Aussie, I think we will probably have to reconsider that for a little while. For a Euro Aussie, there may be some more retracement coming, or some sideways movement rather than a retracement, if the euro begins to prove weaker. But a pound will probably be oversold significantly already, so it will probably be at early stage, I think, and therefore I think I'm looking for next couple of days, probably back end of this week, this pound Aussie to probably line up, and we can start, you know, entering small positions on pound Aussie and see if we can ride it up. And I am actually looking for at least for most of these pairs, I'm expecting, even if we don't go back to the very high, I'm expecting most of these to go back to the higher end of the congestion. So in that sort of case, you know, like here we're talking about 1300 pip. This particular time, I think pound Aussie will also be breaking this downtrend line, which previously we managed to do, but it didn't really hold, so it's over like a false break and another false break. But I think third time, I think we're going to break this one through. So pound Aussie looks to me as the best possible trade probably to enter, compared with pound New Zealand and pound Canada, because New Zealand dollar pair is New Zealand dollar is stronger than these Australian dollar, and I think the Canadian dollar will probably be stronger than the Aussie dollar as well. So from that perspective, my choice would be pound Aussie. You look at the pound yen. The yen is currently strong, in the current environment, they're calling this one a risk off. So in a risk off environment, what people will be doing is they'll be rushing money into the yen and into the pound dollar. I mean, sorry, rushing into the yen and the US dollar. And we know, for example, for quite some time we've been expecting this deep retracement. We never really had, and I think that is taking place now. Okay, so from this perspective, the long trade we were looking to enter on the yen, I think might actually come in now. So what we might finish up doing possibly at some stage when we get a retracement complete is find which trade we want to enter for long, riding the long against the yen, and which trade we want to ride long against Aussie dollar. But you can see from here on this pound yen is that we have gone up in a wave 1, wave 2. If I just show you here, so from here we've gone to wave 1, wave 2, we've gone up to wave 3, and current coming down wave 4. That means once this wave 4 is finished, we'll be going up for wave 5. So for the time being, I wouldn't enter into this particular currency pair at all until we get some decent retracement, which is a retracement from here. So if I put that one on, then we've already retraced 38%. So what we're going to have is, and this one you can see is just wave A coming down. Okay, now in a wave A we might get a 5 wave down, and we may not be finished yet, because on the daily chart, of course, you won't get a divergence straight away. But even if you were to look at the 4 hour, at the moment we don't have a divergence. See, this divergence look like it is failing, so chances are that we might get some further follow down. So what I'm expecting over the next few days is the yen to continue strengthening. So even if you get small retracement along the way, we are still expecting another leg down. That will be just wave 1, or wave A rather. Okay, that will be wave A. Then what we will get after wave A is finished is we'll get wave A, B and C, or flat correction, and then we will get another leg down. And when we get another leg down, we'll get an idea about exactly what kind of price target we can have for downside. But I'm just guessing, if we do a retracement of this leg, 38% already done, so I'm expecting 50%. And see on the left hand side here we have a resistance, so I feel that we may well come back into that. So we'll be looking to if we are looking to go long on the pound yen, then we'll be looking to go long somewhere in the region of 133 area. I would not enter until then. If we continue to keep coming down to 133, then I might consider, but then that will be for a short term. It will be a retracement of that. But I think we'll get to 133 next time round. So the first time round, in the next day or so, we might, remember we said about dollar index maybe only got a little bit of upside. So maybe on here we might get a bit more downside. Then we'll see a bounce for a couple of days, ABC. And again, this pound yen pairs move a lot, so I wouldn't try and enter in there prematurely. I want this leg to finish. I want ABC retracement, then I want another leg to finish, and that's when I will be looking to find a possible entry for pound yen, if I think I want to use that as a long going against the yen. Or we might find one of the other currency pairs to do that. Okay. So currently the pound yen is retracing, and most of the other yen pairs will be doing the same. So those are all the pound pairs. The only other one now remaining is the pound dollar. This is the pound dollar, and in the pound dollar, this is how I am playing with it. Okay, until I'm proved wrong, I'm still thinking that the low back in 2009 was a significant low. Then the rise of ABC gave me capital A. ABC back down. It's a little complex ABC down here. Maybe like A, B, and then a 5 wave down to the 1, 2, 3, 4, and 5 to give me wave B. So A and B. Now I'm basically in an uptrend. I know it doesn't look like it, but I think I'm basically in an uptrend. And in that uptrend, I've already done wave A in capital in this parenthesis, wave A. Then I think this wave A and this recent high as a small b, and then the current low gives me the wave C, and that wave C also gives me the parenthesis wave B, and therefore until proven wrong, I am looking for pound to now start rallying to the upside, even though UK have lost AAA rating. But I think the most of the damage already been done. So we should be, at least if nothing else, we should be bouncing. That's an absolute minimum. We should be bouncing back toward 50% retracement. But probably we might actually find a new, if the dollar begins to now decline significantly, then we may find the pound will actually make a run to the upside. And having been oversold so significantly, and it is back toward the structural support. Previously there was a support here, and we've fallen below. But if you break back up, that will look like a false break, and people will be caught on the wrong side, because there are a lot of people who've shorted the pound, and they've shorted the pound on the basis that this is a symmetrical triangle and it's broken, and everybody at the moment is gunning for pound to come down to this low here at 142, and then 135 area. That's where they're expecting, and I think they will be caught short on the wrong side, and the I think recovery will be fast and furious. I could be completely wrong, but that currently is my hypothesis. And whilst I believe that, I'm not going to be fooled. I'm not going to start taking big positions on. But nevertheless, on the pound New Zealand, we know we have an ending pattern. So that confirmed that there is some kind of a bottoming being put for a pound. And we similarly also worked out on a pound Aussie that we have some other confirmation as well as pound New Zealand. So when you look at the pound dollar, this is what I've got. So we've got horizontally, we have an area where previously there has been a lot of support. If I put a Fibonacci retracement on this leg up, that is from the low of 16th of May, 23rd of May to this high here, then the 60%, 61.8% retracement has just been breached marginally. Okay, if I drop down to daily chart, then on daily we don't have a real divergence yet, but if you look at 4 hour, I do have a clear divergence on 4 hour, and on 4 hour you can see also that the downtrend line has been broken. Even if I connect it to here, we are almost about to breach that downtrend line on RSI. Okay, what have we got here on a price chart? Well, on a price chart we've got ABC, so I can call that W. Then we got ABC back up as a give wave X, and then we've got ABC in the next one down. So here we had a small a, B and C. Here also we have small a, B and C. Here we had a wave C with a 5 waves in. Here also we have C with a 5 waves in. So I think those things tells me that there is some recognizable pattern, and that the bottom is already in. Then if I also measure 1-to-1 ratio, so in other words, if I say I measure this first drop and then I apply that from this high here, you can see we've come almost very close into that. If I measure it this slightly differently, if I measure that to here for example, okay, and then apply that to there, that brings your price almost into it. If you use the other one, then it's just fractionally below. So I think of course geometry that is also lining up with our Fibonacci retracement. We said just below 61.8%, so this is 61.8%. and interestingly, after having all this decline, on Friday we closed low, and then over the weekend we gapped down. Now that to me seem to think that it is an exhaustion gap. If you get a gap like that after all this decline, to me it's an exhaustion gap. I cannot imagine that gap is a kind of a gap which is a continuation gap. Continuation gap you would have expected somewhere in the middle. Okay, so I don't think that has happened. If you look at this now, then just like the pound New Zealand and pound Aussie, we are getting this initial uptrend going. Now if we are wrong, then we are not going to risk anything. At the moment we are trying to paint a picture to say what are we expecting. So if we find this is the bottom, okay, then we are expecting this now to be a new uptrend. So new uptrend is not going to fizzle out by the time the price only gets to here. For example, the gap has already been filled, but we're expecting a new uptrend. So in a new uptrend, I think we got a small 1, small 2, small 3, small 4 and small 5. So that gives you wave 1, ABC down, wave 2. This one is a wave 3. We've already retraced into wave 4, or are currently retracing into wave 4, in which case we should see a small leg up, right? So that will complete 1, 2, 3, 4 and 5. So we will get, you can see most of these currency pairs with the pound will do exactly the same. Then once that 5 legs are up, we should get a small a, small b and another retracement to the back, and therefore pound dollar could be potentially a buy somewhere in the region of 155, 150, 150 area somewhere, or a little bit deeper, 150. If it drops to here, then that was a here we had a support, here we had resistance. So I could expect somewhere in that area 150, 150 I think to be a sort of a round figure approximately in there. And then also got this minor rising trend channel to hold, so potentially to enable me to see if it's actually putting a bottom in. And then I also have this downtrend channel, so that will break to the upside. So I think all those things will be setting for potential pound to rally. And then on the other pairs, we've noticed that the pound could form inverted head and shoulder. Well, here we have a left shoulder, we have a head, and it's possibly, if he gets, so if this one rises up and comes down, retrace back up, it will form right shoulder. So we'll have an inverted head and shoulder pattern. And I think potentially we should be looking to go long, but we don't want to go long now. We want to wait until all this Italian thing is out, and by then this pound to form the complete 5 wave up, then do ABC retracement as a wave 2, complete 5 wave up to give you wave 1 of a larger degree, retracement wave 2, and then that's when we're looking to get long. Okay, so that's all the pound pairs. Canadian pairs is still in a process of putting a top in there, but it's of this decline, it has done 78.6% retracement. Okay, since that's the decline from July high, it's done 78% retracement right into there and into that area. On the daily, we've got no divergence, but on 4 hour we do have a double divergence here. We have a divergence from the previous high and the current high, and also divergence in the more recent cycle high. So I think dollar Canada is also trying to suggest that there is a possible top being formed, and even though we may have a bit more to go, like small decline and then one final leg up, because if you look at it, see, this one wave 1, this is wave 2, this one is wave 3, so we should get a little bit more down here, wave 4, and then the final wave 5. So I think this is what we're going to get, like that. So I think we could find that this dollar may remain relatively strong for most of the week. I think probably back end of the week, maybe on Friday, we might actually see dollar weakening out, and during that time I think a pound will probably try and gingerly try and tread water and try and relatively strong compared with euro and some of the other currency pairs, because it has been sold off so heavily in the recent times. So relatively speaking, pound will still continue to trade sideways to upside against the dollar, and dollar is in a final stage of topping out, I think. And if you look at the euro will probably for the time being remain as the weakest currency for the next week or so. So what am I expecting? Well, in line with the dollar index, I am now saying from July low, whatever these waves were, I'm calling that wave A in capital, and in the dollar index we had wave A in capital to the downside. So then we got ABC, wave B in capital, and we've gone up and we've done wave C. Whatever this wave was, it's ABC zigzag done. We are now coming back down, and we've had divergence between wave A and wave B, so we are retracing the entire rise, and in that entire rise we have already come into what appears to be 38% retracement. So you know, if you get any more sell-off, will probably come really deep, something like 50%. And see, so far we're still within that trend channel. And what I think we've got is we've got this. When I was counting this internal, it's not very clear 5 waves, so I'm not willing to consider that as a potential wave 1. So I'm calling that as W X. Then you got 5 wave as Y X Z. So it's given me triple zigzag, in other words, right? That's W X Y X Z. Then we had ABC back up. So this W X Y X Z has given me a wave A in parenthesis, ABC retracement wave B in parenthesis, and now we are working on this second part of the leg. So this formed the first part. This is the second part. In the first part, if I had this either a 5 wave or 5 swings, so in other words, W X Y X Z, so that's a 5 swings. It might not be clear 5 waves in a normal impulsive manner. It might be 5 swings, so we should get a 5 swing here. So I've got 1, 2, currently in 3, maybe retracement, and that. So to do that, I personally think that we may find a euro, you know, I mean, even if it bounces here, I'm still expecting another leg down on a euro. So if it bounces, you might find that, you know, depending on what happens about Italian results, it might be over the night, maybe next day or two, it might bounce, come back to this area here where previously it was a resistance, or support rather, could become resistance, and it might come down again in another leg, and probably dollar will do the opposite in the same way. So what we might find is that the currencies which have been relatively very weak, like a pound, yen, and Canada, consequently dollars continue to rise. I think now the pound, Canadian, and yen either will gain against the dollar or will trade sideways, and the only weakest currency left then will be the euro and Swissy. And therefore, even though euro and Swissy will weaken quite a bit, the dollar index will not strengthen immensely, because the other currencies will be trying to moderate that particular strength on the dollar index. And that's why we're not expecting dollar index to go significantly high, even though we expect euro to come down quite a bit. Okay, so on a euro we got 1 swing, 2 swing, 3 swing, 4 retracement, and 5 swing, and that will complete this double zigzag. So we got a first 3, you know, like a first 5 swing wave is not really a zigzaggy one, but it's got W X Y X Z. Okay, so we're going to get W X Y X Z also on this one. Once we've done that, then who knows whether that will actually be the bottom, because remember over here what we did, we came down ABC, so that particular wave was complete wave 1. Okay, but before that we already had this one. So over here we might get something similar. We might get something like this, another one down, before euro really gets going. Okay, so you know, we'll have to wait and see how it all looks like, but for the time being I think euro is going to be relatively weak, so we wouldn't trade euro strength against anything. Okay, we wouldn't string, oh no, okay, I must carry on and just finish this. Okay, so that would be the euro pound, euro dollar rather. Oh dear me. Okay, so anyway, that's a euro dollar. And I think I'll stop here now because I think I'm having a lot of problem with the internet.